All right, welcome back. You're listening to another episode of Walk-Ins Welcome, where it is our goal, desire, and dream to help you triple your revenue through digital marketing services and exceptional patient experience. Michael's with me. I'm Nick Horde, and we also have a guest with us today. Michael, who's with us today?
Yeah, we got Patrick Campbell today. He is the founder, CEO of OpenVia, but he's been in the healthcare world for a number of years, over 10 years, almost, 15. And he has a ton of experience with getting investors involved. So today's episode, we're going to gear it completely around the idea of like, hey, I want to start an urgent care or a medical practice, but I need funding to make it happen, not necessarily the traditional bank way. So Patrick, glad you're here.
Welcome to the podcast. Say hello to the Walk-Ins Welcome audience and tell us one thing that people think is true about investors that isn't.
Oh, thanks for being here, guys. I really appreciate it. And one thing people think is true about investors but isn't. I think a lot of people come in and think that it's product first, right? The product is the most important piece. And obviously, product is a really important factor, but also probably even bigger is, showing the opportunity, showing the future and casting a vision and showing investors, hey, if you buy in now, maybe our product is where it is today. Maybe it's not the greatest, but we'll improve. And here's the opportunity that has, set forth in the future for generating returns on your investment. A lot of founders, myself included, started with an idea around a product, and you've got to really take that product hat off as a creator and as an entrepreneur. It's hard to set aside what your product is and separate that from the business. So it's really important if you're going out and trying to pitch investors and get investment from outside sources of capital to really refocus your conversations on the business that you're building and the vision that you're going after, rather than the individual product that you're building to make that happen.
That was a loaded answer. I like it.
I like it, man. Go ahead. What's your question? I got one too.
Well, I was going to say, I'm going to go. You have a question about the answer?
You're good.
So I was going to say, so let our audience know a little bit about you in the sense of you've had these experiences. So if you can kind of give like a synopsis of some of the experiences you've had, because it's been ups and downs, right? Like not everything's, I got money and it all worked and I made a bunch of money. So kind of walk through that.
Yeah. So, as you mentioned, I spent a number of years in the healthcare world prior to starting OpenVia. And in fact, I had a B2B software company servicing the healthcare industry that I started in 2016 and ultimately sold in I started in 2013, sold in 2016. But I didn't get rich out off of that. So I was starting probably in a very similar place to a lot of folks that may be listening to your podcast. They're working for somebody else and have a dream and a vision to go out and tackle it. My initial vision and the initial product that we brought to market was a consumer-focused product. It was a delivery safe concept called the Porch Pod. And the idea was you could put it on your front porch, your suburban single family home, and all your packages, your grocery deliveries, all that stuff could go in the box. We got into a technology accelerator based upon that concept and that vision called Techstars. It's one of the more well-known technology accelerator programs out there. Highly recommend it to any entrepreneurs that have a technology bend to their business. Raised a little bit of angel capital after that time in Techstars. And then we went to market. And as I was telling you in the lead up to the start of this conversation, things didn't go so well. We found out pretty quickly that we were serving a market that really needed a higher end product or an ultra low end product. And we were kind of somewhere in the middle in no man's land. And, what ended up happening is we had to retool and really go back and boil down back to that initial idea and the concept, the problem that we could potentially solve with the tech we had built. And ultimately came up to what the product is today called OpenVia. And it is a product that allows for delivery companies, service companies to be able to access controlled properties. So primarily apartment buildings, but also gated communities as well. That was a long, painful process. There was several months there where I wasn't able to take any cash home, personally, and that's a really tough transition. And starting to talk to investors from basically cold start's probably the worst place you could possibly be, and that's kind of where I was. So it has been a lot of ups and downs. We certainly haven't crested the top of the hill and feel like we're in a position where we've accomplished everything we set out to. But we're in a lot better place than we were this time last year, I guess.
I love that how you pivoted, right? Like you had something and you're like, we can make something better out of this.
That's right.
So, but no, but to me, like you brought in investors. It didn't work the way you hoped you did. You wanted to. It affected you personally, and you had to make adjustments. And now you're on the other side of it, which is fantastic. But yeah, I mean that, and I think how you said, like, it's the cult, like the start with investors with nothing is a very, very difficult start process.
I would not recommend for anybody listening, if you have an idea. And we can get into this a little bit later in the episode, but starting from scratch is a almost impossible place to start with. So you have to have some things together. Maybe you don't have your technology or your product fully built out yet, but you have to bring something to show to the table for people to start to wrap their heads around it.
Yeah, and this isn't like Shark Tank. It's a little different, right?
Sure. Yeah.
Well, I think there are a lot of opportunities out there in the healthcare space. So, we primarily deal in retail health, right? These aren't going to be your appointment-based things. These are more of, I need you today, I need you now. It could even be a vanity type thing. Mm-hmm. And I hope that doesn't come across wrong. I'm talking about like teeth whitening or, med spa type services, right?
Sure.
Improvement of quality of life.
That's right. And those are all retail health situations. And I think it's so new that there's a lot of innovation that could still happen in that space. And as people come across these different opportunities, these different ideas that they have, they're going to need funding. Well, they may or may not need funding, to be honest with you. I don't know. And this is why we wanted to have you on is one, and I'll just start here and kind of leave it as like, what types of investments are there out there for people to go after? Like you had mentioned angel investors. Well, what else is there? What is that? And then what else is there?
Yeah, so this is all born out of my experience. I'm by no means necessarily an expert, but I'll bucket it in kind of three categories. So you have classic venture capitalists, people who want to put in $1 today and get that back with 100 of its friends in 5 to 7 years, right? So they're investing in what are now the big names, right? So Facebook and Google and basically in the big companies that we're familiar with as a household name, at some point have taken on venture capital. And their motivations, by and large, have traditionally been pure financial. Like I said, I put in $1 today and I get back it and 100 of its friends in 5 to 7 years, if not 1,000 of its friends. That has started to change over the past 3 or 4 years where a lot of investors are getting really specialized. They're going into niches. So they may have a real interest within the healthcare space or the health tech space to do investments. And, because they have taken money from what is called limited partners, people who've invested into their pool of capital that they're now managing and distributing, there are people within that network who can be helpful or potentially just be customers for you as a startup. So that's one big bucket. I think a lot of people go after venture capital as kind of the default, but it's not the only way to build a business. There's a couple of two other buckets in my mind. There's kind of like more the private equity, and that tends to be a little bit more of an established business. Though there are some folks that are operating on the earlier end of the private equity spectrum. But by and large, those tend to need to be going concern type businesses. So you're already, have a track record, you have some revenue, you have the model worked out, you just need more fuel or to bring in a partner that knows how to scale things up. And they can be really helpful in that regard. And the last bucket, is probably the most diverse bucket is angel investors. And we've taken ourselves a number of angels on board through our several rounds of financing. angel investors tend to be high net worth individuals. By law, they have to have $1 million net worth outside of their personal home. There's income requirements. Yeah, the securities.
I thought that was just a term. I didn't know it was like an actual status.
Yeah, you have to be an accredited investor. Obviously, talk to your attorney before you do this. But I think the latest that I'm familiar with was you have to have $1 million net worth outside of your home, or you could qualify through income as well. I believe it was $200,000 as an individual or $300,000 as a couple, and that gets you in the accredited investor category. So those guys tend to be, and girls tend to be, people who are pretty far along in their career, or maybe have been successful business people in their own right. In my experience, most of them are looking for a way to give back, right? They're not pulling up the ladder behind them once they're on the boat. They're looking for a way to deploy a little capital and hopefully get a good return, but also at the same time be really helpful and be able to make introductions within their network, provide some expertise that they've built throughout their career that can be helpful to an entrepreneur. The challenge is finding these people, because they, by and large, most of them don't put on their LinkedIn profiles or social media, I'm an angel investor.
Give me up. I got some money for you.
Right. And that's that makes sense, because if they did, they probably would get inundated with opportunities that they weren't necessarily qualified or interested in at all. So have to do a bit of network. There's certainly resources out there. Angel List is a good resource to find angel investors. That's kind of where a lot of them congregate. But then there's also a lot of lists that are available online. I spent a lot of time on Twitter.
Oh, on Twitter. Yeah, things the Angel List. I was like, Angie's List? Angel's List.
No.
You can bet there is a niche specific angels investors for the medical community. I could imagine there's a lot of doctors.
There absolutely is. Yeah, for sure. I don't know of any of them off the top of my head, but I know that there are definitely some groups in Nashville that are big in that space. And if you're building, whether it's a medical product or you're taking a new take on clinics, or you're building an application or piece of technology for healthcare, there's definitely angel investors out there who are interested in the healthcare and health tech spaces.
So just to clarify, an angel investor gives money, no return. Is that?
So angel investors are, by and large, are investing for the hope of owning a percentage of the company at some point.
I got you.
That may be structured a couple of different ways. It could be a debt instrument, it's called a convertible note, or a safe agreement. Research those on your own. And then there's preferred equity rounds, which is more of a traditional venture capital type round. And basically they want to have shares in the business, but by and large, at least my experience is the angel investors I've dealt with, most of them aren't investing out of the pure intent of getting a return on their capital. Mm-hmm. There's something else that they're excited about that causes them to invest in your business, whether it's they think they could be helpful for you, they think you're a good person, you're a friend, or you're within their network, and they want to give someone they know a hand, or their experience is just it's just such a great fit for what you're doing. They're interested in helping you out in some way.
Okay, that makes sense. And I mean, I could see angel investors in like even the capacity of like wanting to see a company that's solving an issue that they had a personal experience with, and this could
for sure,
things like that.
For sure.
Cool. Like, and I would say, you may or may not agree, but I would think an angel investor is rare, in most sense.
Yeah, there are more of them out there than you think. I guess the challenge is finding them. Yeah. Like I said, it's a bit of a networking challenge.
You want to give me your money?
Take a I have a picture and say, right, please give me money.
Yeah, and there are
in the background.
there are groups here locally within Birmingham and elsewhere, basically any size town, our size or larger, probably has an angel group, and they probably talk about what they do. So if you're in a particular geography, start from a geographic fit first. They tend to be a little bit more excited about investing locally, and then beyond that, I would to your point earlier, Nick, look for folks that have a fit from they have an interest in healthcare or interest in health tech. And there are certainly angel groups that out there almost assuredly that do a lot of investing in those sectors.
As people are listening to this, they're getting excited at the idea of finding, an angel investor, venture capitalist, even an SBA loan, right? When is a good time for somebody to start getting them involved in their idea? When is the right time for that?
When you have something to show them, and it could be rough, it could be early.
Are you talking like a business plan? Or are you talking about a product? I mean, because I can write a whole bunch of stuff down on paper and show it to somebody.
Sure. Yeah, I think you have to have something to show. So a little bit beyond a business plan, typically is what they're going to want to see. Everybody wants to see some traction, right? Everybody wants to see that you're going to make something happen, whether I'm involved or not. As an angel investor, I know you, Nick. You're going to make this happen. You're going to run through walls, and if I'm going to put $1 in, I know you're going to stretch it for everything it's worth, and hopefully bring back a big return.
They want to know you're not poking it with a stick, right?
Yeah,
and it sounds like they're investing into you.
Well, it sounds to me like it sits right in between a business plan and a finished product. So somewhere in between there is where you're going to start looking at.
And basically all they're missing is the funding to make it happen.
Correct.
Yeah. For sure. And the closer you can get to finished product without investment dollars, the better off. And typically the more the higher valuation that you can get, the less percentage of your company you may have to sell to be able to get investment. So the further along, the better is probably the best advice. But you don't have to have a fully baked product or fully baked design or operational clinic in a lot of cases, but you need to have some more than a business plan. So to your point earlier, Nick, somewhere in between the written plan and fully produced product.
So we have a listener, and they're hearing everything that we're talking about right now. They have this great idea. It's fleshed out. They've built prototype, or they've built website, or they've built intent. Mm-hmm. They have an investor involved. What can they expect from that investor? Past the money, what's going to happen there? Explain that.
Yeah. You as an entrepreneur, owe them a duty to keep them involved and keep them updated of what the latest of your business is. And this takes a lot of different forms. I mean, I have a couple of angel investors I text with regularly, and several times a week, if not more often. So you got to be hyper communicative to them. And then the other things that you should expect from your investors is to open up their Rolodex. I know now we don't have Rolodexes, but open up their phone books or LinkedIn accounts, and to be helpful in the form of introductions, because it's everybody has their own network that they're bringing to the table. You as an entrepreneur, I know I was earlier on in my career than all of my angel investors, and they were able to bring contacts from their experience to the table and to have conversations or potentially invest as well. So expect to spend a lot of time talking with and keeping your investors updated, but also at the same time, ask for introductions to their network, to people who could be other investors, could be customers, could be distribution partnerships. If you're a technology partner, distribution partnerships can go a really long way.
All right, I have one last question, Michael, and then you can chime in with whatever you have left. And that is, okay, what is the risk of taking on investors?
Yeah, so I guess the biggest risk, well, first off, these deals typically are structured. You'll have a C corporation, so the loans or the money invested into the company typically lives and dies with the company. So you don't have typically personal liability. So that's a great benefit of that. But sorry, I got a little sidetracked. Remind me the question one more time.
What are the risks that you take
Yeah.
by taking on a capitalist, like a venture or an angel investor? Like, what risk to you, either personal or to the business, is going to come with that?
Yeah, typically you're taking on investment as on the business. So typically you don't have any personal liability from a financial perspective. But when you take outside investment, you're basically filling up with jet fuel, and you've got to be ready to go to deploy that quickly. Depending on what kind of investors, they may have different takes on how fast you deploy that capital over what period of time. If we're talking, venture capitalists, they'll typically expect you to raise again in 9 to 18 months from the most recent financing. So they expect that you're going to be, basically half out of that money by the time the year mark rolls around, and you've used that money to get so much traction that you're going to be in a position to raise that next follow-on tranche of capital. Now, if we're talking,
Go ahead.
No. If we're talking to angel investors, they may be a little bit more conservative. They may want you to hold back the reins a bit more on your spend until you have a replicable process. So it's a little different based upon the groups that you're taking investment from. But by and large, I think there's an advantage of taking venture capital versus SBA or bank loan type products, where typically there's no personal liability.
So one thing you kind of touched on, but I would say the other part that people may not think about is, even though you own the company per se, but you have venture capitalists that help fund it, they're kind of your boss to a certain degree, right?
Yeah.
And there's that pressure there to perform.
I put oversight.
Yeah, right.
Which is that's the scariest thing to me, and I don't know why.
Yeah, well, and that's
not a good reason.
And I do think it's funny because most entrepreneurs, they're an entrepreneur because they don't want people to tell them what to do.
They don't want a boss.
Yeah.
And that's kind of the downside to me. Like, that's the downside where there's some awesome pluses. Funding, network. It'll probably grow faster this route than doing it just yourself. Like, there's a lot of pluses there, but
exponential growth, I would say, arguably.
Yeah, easily.
Assuming it's a good product.
And it all works. But like that constant pressure of, well, this was a bad month, and you're having to answer to somebody as to why it was a bad month. Or you're unable to perform because you got sick or whatever. Well, now what? Like, you have to answer to somebody. There's layers to it. But so I would almost say, when you're looking at investors and stuff like that, you need to jive with them. Like, you need to make sure there's a good personality fit, honestly, because if they may be awesome in terms of network and providing the funds, but they're terrible to actually work with, you don't want that, I don't think.
Yeah, you could end up in some seriously bad situations where maybe you've got a family and you have responsibilities outside of the business that you need to take care of, and if you have an investor that it just wants you to hard charge, work 90 hours, 100 hours a week, that may not be practical for your life. So you're spot on. I mean, it's incredibly important to get a good cultural fit and a good personality fit with your investors to make sure, okay, here's what I'm committing to do as an entrepreneur. I just want to make sure that this aligns with what your expectations are as an investor, and have that conversation before you take the first dollar of outside capital. Because you're right. I mean, when they become your investors, they essentially become your bosses. And if you take a round of venture capital, a lot of times you're either establishing or adding them to your board of directors. Mm-hmm. They have the right to hire and fire you, regardless of how much equity you actually hold in the business. They have a legal ability to oust you, and that's a pretty rare circumstance. But it's definitely something you want to be cognizant of.
Steve Jobs had that happen.
Mm-hmm.
Wow.
That's scary.
I don't know about you, but this has been fascinating.
It has, and it's
Because I've
and
never-
Patrick, to your, it's been 25 minutes of already talking, which is just
That's how fast it goes.
that's how fast it went. So we're already kind of at the end of the episode. I think I could have more questions, just stemming off what was been said so far. So Patrick, I have a feeling we'll have you back on at some point. But yeah, that's pretty good.
I want you to leave everybody with kind of some parting advice. Somebody is listening. They think they want to get their product off the ground. They've got it fleshed out. They want to get investors involved. I'm not going anywhere with this. Patrick, what is your advice to somebody who wants to get investors involved?
Yeah, reach out to your network. If you already know people who do some side investing, start that conversation early. You may not necessarily be in the position where you're saying, "Hey, will you invest today?" I think one of the things that I've heard early on that rang so true in our fundraising process, particularly with angels, if you ask for money, you get advice, but if you ask for advice, you get money.
That's pretty good. That's pretty good. I like that. Let's name the episode that.
So, if you bring your questions, say, "Hey, I know you've got a lot of experience in this area. What do you think about this?" Like poke some holes and, make them your thought partner. And, over a period of time, you build that relationship. If you don't know them that well to begin with, you've kind of built the relationship, and a couple of weeks or a couple of months down the line, once they've had the opportunity to kind of get to know you, to say, "Hey, is this something you would be interested in investing in?" Or some of your friends, the people that you know in your network, is this something that they could get excited about? Yeah. If the answer is no, then take that back and refine it, and recraft your pitch. Maybe there's a piece of the puzzle that they were just didn't pick up on, but it's a really it's something that's core to your business that you could talk about a little bit more, and helps you craft that narrative. And every one of the conversations you have, should help you improve the conversation with the next person. So by the time you've talked to 150, 200 investors like I have, you've gotten a really tight and succinct conversation. As you can tell, I like to kind of ramble on a bit.
I get a feeling, Patrick, though, that you probably went with the spirit of how can I help you too?
Yeah,
for sure.
And give off that vibe like, "Hey, I need these things from you, and I'm picking your brain, and I want to know what I can do better." And then I feel like that conversation would end with, "Is there anything that I can do for you?"
For sure.
I just believe that about you. And I think that would be a great thing that anybody who's going to be talking to investors, hey, don't forget, like, they're a human too. Probably
Absolutely.
Want to grow their own connections.
They're not just a bank account.
Yeah, even the bank needs a friendship.
Yeah, exactly.
And a blessing from time to time.
Yeah.
So I just wanted to throw that out there for consideration too. I think people do business with people they like, know, and trust.
Mm-hmm.
For sure.
And part of that is giving back.
Yep. Awesome. Well, Patrick, thank you again for coming on today's podcast. This has been fantastic, super educational for me for sure.
Absolutely.
I hope our audience enjoyed that. And then, of course, if you want to find Patrick, go to LinkedIn. Look up Patrick Campbell. He's out there. He's all over LinkedIn. If you want to check him out, if you want to reach out to him, reach out to us if you guys have anything that you had some questions on. But please, we always make the ask. Please go rate our podcast. Give us some stars. Give us a review. That's super helpful to us, not just on Apple, but also Spotify and Google Podcasts. Anything like that's super helpful. But Patrick, thank you again for coming on today. And got anything else, Nick?
No, thank you for listening. You are the average of the people that you hang out. You've been hanging out with Michael. You've been hanging out with Nick. You've been hanging out with Patrick.
There you go.
Rising tide raises all ships. Y'all go out and crush it this week.
All right, thank you, Patrick.
Thanks, man.
Thanks, guys.